So I think we can all agree, there is lots of opportunities. Okay, there's lots and lots of opportunities in the market, and implementation, this is a great quote from Darren, implementation assumes readiness. Okay, so in other words, the plan must be created, it must be completed, and it must be something that's actionable based on historical results, and there's to be no gaps in the plan. And we should be able to pull up any chart, okay? And I'm going to pull up a chart in just a moment and take a look at what opportunity looks like, because back in 2020, I know I had my biggest trading day ever, and I've since taken advantage of many other opportunities by having a plan. I'm going to walk you through a couple of those as well. And then in the next section, I'm going to be talking about what you need in your plan. Also be giving you some guidelines as to what to include as a minimum, and what you're going to want to go away from here and start to think about in your own trading as well. All right, so I'm going to close off my camera because it's a little bit distracting. I want you to look at the screen now instead of me, plus I'm going to be swigging water. So these are the opportunities. In front of you is the S&P 500. Okay, 500 of the top performing companies in the world, some of the largest and best performing companies in the world that make up the top 500 companies, the S&P 500. And what you're looking at in front of you is a series of crashes. Okay, a series of crashes that have all had opportunity. Lots and lots of opportunity. Can't see the screen? Who can't see the screen? Can everyone see the screen? Don't want to go on if you can't see the screen. Screen's fine. Great. Great. Let me just close off this. All right. So each and every one of these, from the oil crisis to the Fed rate hike to Black Monday to the tech crash to the global financial crash to COVID, each one of those yields reward from opportunity with a plan. Okay. In fact, I was literally just at the investor show talking about this very thing, about how to invest in a recession and where the opportunities are and how you can develop a plan around investing during a crash or an inflated market. So we've got this horizontal mean price of the market of the S&P 500 over the last 50 years. Sorry, 30 odd years. And what you're going to see here is, sorry, this is 50 years. Yeah, I did go back 50 years. So what you're going to see here is where the market's overinflated and where it's depressed or crashing. And as you can see right now, we're about 18%. We went about to 26%, but we're about 18% above the 50-year mean growth of the market in the S&P 500. What that means is there's an opportunity here, but you have to have a plan to invest when the market's overinflated, like the boys up here, right? Because how many people went broke back in the tech boom? A lot of people went broke back in the tech boom because they got overridden by greed and fear of missing out, and then greed that the market would go on and on and on forever, when in actual fact you need a plan to take advantage of this opportunity when we're booming, and you need a plan to take advantage of the opportunities when we're crashing, and you need a plan to take advantage of the day-to-day opportunities, of which there's hundreds depending on your style of trading. And I was speaking about this at the London Investor Show, literally in the main stage. They asked me to talk about this very topic, and I was teaching hundreds of people how to have a plan, an investment plan, and a strategy to take advantage of opportunity. And just because of the feedback that I got from this event, I've now been asked to go and speak at the social investing conference on the 2nd of December to talk about that. So that's pretty cool. I'm getting asked to talk around all these different investment stages because I'm able to share how to build plans around opportunity. And you guys are going to spend 3-4 days with us drilling into your trading plan so that you can take advantage of these opportunities as well. So it's a good place to be. Now, Bitcoin, similar situation. Bitcoin has gone up 200% per year for over a decade now. People lose their hat when they see a little bit of a crash, but in actual fact, the crash that we saw recently on Bitcoin, not a crash, but a correction, when Elon Musk tweeted that Tesla will stop using Bitcoin for Tesla, okay, whether that was manipulation or not, that was just a tiny little blip compared to most of the previous corrections from Bitcoin. And when you have a plan, you're not worried about, oh, the market's going down today, and checking your markets every day and checking your investments every day, because you got in because there was a reason to get in that your trade plan told you to get into, and it wasn't based off of your feelings and what felt good on that particular day. So you saw the opportunity and you use a plan to get in. You're not worried about all of this stuff. You're not worried about Elon Musk tweeting. You're not checking his Twitter account and stalking him on Twitter, praying that he's going to say something good, because you took a trade or you took an investment that you'd already pre-calculated. It already met a set of rules that you knew was going to provide a reward on average over a period of time. So back in April last year, I had 6 trades. Okay, I had 4 trades on the Monday or the Tuesday, and then I had 2 trades later on in that afternoon and the next day, and I was able to generate a decent return. You know, it was my biggest trading day, 133,000 in one day, in 18 hours of trading, and I was able to do that by the same way that I place every trade. Same with Bitcoin in 2018. You guys might have seen the video I put on YouTube in October. I told you exactly what I was looking for, where I was likely to get in if we dipped. This was the prediction on the left. And we took a little dip down, and then my prediction was we were going to rally 50% above the high. Okay, so a 20% dip, then a 50% rally above the high. I got in around 3875, I think the price I got in at now. And I was in that trade for, I told you guys I was going to get out at 28,000. I actually got out at 29,120 in January this year. But you can see on the left-hand side, here's the prediction. Here's the actual play on the daily chart. And that played out. And again, it's a plan, a tested plan of taking advantage of opportunity. Then I got back in February. I got back in, I looked at the same, I did the same analysis. I put how to buy Bitcoin out in February the 10th. And I said, if we dip down, I'm not going to be bottom picking. I'm going to get in around 44,000. Ended up getting in at around 44,000. We took the little dip down, again, rally. And now March 21 goes by and we're rallying even more. And November 21, we're at all-time highs. I was going to show you a snapshot. Oh, I've got the snapshot here. So yeah, I put 25 grand into an investment of Bitcoin in February. And now last night, I took this snapshot on my Coinbase account showing that we're up 40,000. Now that is not a case of taking a punt. Who can agree that I didn't just take a punt here? This is a solid pattern recognition, looking at historical markets. You can see here where I've done my testing on historical analysis, and then I've taken an allocation, a portion of my investment funds, and due to the level of speculation, I've allocated a certain percentage, a low percentage of my total overall liquidity, and I've put it into this investment because that's part of the plan. And then I know that if it loses, if I have to cut my losses, I know that it's money I can afford to lose, but second of all, there's a bloody high probability that I'm going to win. All right, because the higher the speculation for me, I need the strike rate to be higher. So it's like, I need to swing and swing and swing and connect more often than I don't. For me, with high speculations, I need to connect more often than I don't. So you can develop a system that will allow you to have a high strike rate. You can develop a system that's going to allow you to have a high strike rate and take advantage of, I'm not saying Bitcoin, I'm just showing you some examples here of markets that are kind of in the news right now. They're relevant topics. They're talked about topics, and there's many, many more opportunities here. Now, a funny one was Ford Motors. Darren mentioned Ford Motors. I think he brought this on last year when we was doing Ascension. And see here, who came to the 2020 Ascension, by the way? Who was at the 2020 Ascension event that we did in April 2020? Anyone here? Yeah? Cool. Well, we opened the event, and the way we opened the event was we were saying, right, we've just come off the back of this. This is where we were. The event was here, okay, in April. Many of these markets have just taken a deep dive. Ford went down to 393 or something. And we said to you at the time, yes, we've just taken a dip, but now there is a higher, there's a lot of opportunity here, once in a decade opportunities for some markets, to take advantage of these opportunities and provide some real decent returns if you've got a plan. If you've got a plan. Does anyone remember being there? Now, we were here. We were here in April 2020. And since then, there's been more opportunities. There's more compression. Does this look familiar? This looks familiar to my Bitcoin predictions as well, funnily enough, almost identical. But we've had more and more and more and more. Right? This is what opportunities look like, right? This is what opportunities look like. So what we want you guys to do is to really put a plan together now so you're ready next time. If you didn't do it back then, we need to do it now so that you're ready for opportunity next time.